Overnight, the Bank of Japan joined the Fed in announcing additional asset purchases to help stimulate the economy. Goldman Sachs Chief Financial Officer David Vanier stepped down on Tuesday to retire, while Harvey Schwartz, the global co-head of Securities Division, will succeed him. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Lindsey Bell with TheStreet, and together we bring you the Morning Call Express. The market's pointing to a positive open this morning after the Bank of Japan expanded their asset purchase program. Was this a surprise to you, Scott?
Surprise, it seems like the whole world's doing that. So, for them to do more, I guess it's needed. And they've been stuck in this sluggish type growth for a long time. A lot of people are saying that we are the new Japan. They're on 20 years or so, and we're basically at about 12. But Big Ben is doing everything he can for that not to happen. So anyway, not a surprise. Futures nice positive tone. We've just had a 2-day controlled pullback from Friday's highs. So I think the market's acting very well, very constructive right now.
Yeah, we're working off some of that overbought situation there. But what levels are you watching?
So let's just go right to the S&P. So if you take a look at the chart of the S&P, you will see, the major move that started October 4th, re-energized as we hit the low here on June 4th. And this is that cup and handle pattern that we've been talking about in maneuvering. One breakout above here, about 14.15, and then this one. And then if you go right where we are today, look very closely, you will see, here is Friday's peak. You have 14.74. 2 days of controlled pullback, letting the 8-day catch up, which we've been riding ever since this last igniting bar. So at this point, very healthy. If we start getting back above 1461, perhaps we'll be back in motion to take out these highs. But right now, the oscillator is being worked off, and leaders aren't sticking around.
The home builders has been a leading sector all year long, but they also pulled back in the last 2 days as well. Is it still the place to be?
It's been leading, and if you take a look at the chart, it too let the 8-day catch up. You go to the XHB, you will see that after an impressive move, hugging the 8-day all the way up, 2 days down to the 8-day. We've broken through it once or twice. So right in here, we want to evaluate the action. The action in Lennar still very strong. Also going sideways after a big move, hugging the 8-day. Same thing can go for Toll Brothers. Toll Brothers also 2 days control to the downside. So I think this group is still a leading group until it proves otherwise.
The OIH, the oil, those names also have seen a pullback too. We saw some crazy action in oil over the last few days. I think we're starting to see more macro reasons for the pullback here with Saudi Arabia taking actions to bring the prices lower. But what are you seeing in this group?
I just think that a little bit more pressure than the leading group. This group never led this year. It played catch up, this quarter, and then oil had its bigger down day on Monday versus the rest of the indices. If you look at the OIHs, though, not that bad considering the move that it's had since the lows here. Also hugging the 8-day. It could hit the 21-day. The mid-tier groups are going a little bit lower. You look at a stock like VLO. It actually, came in, broke the 8-day, held the 21-day. So Schlumberger also, just say, this one held the 8-day after a major move. So at this point, I just think, look to buy the 8/21, look for tight patterns, and then add to it and keep managing positions. Sell excitement, buy the dip, and continue to follow this trend.
High beta tech has continued to be strong. Let's look at Apple. This Friday, the iPhone 5 is actually released. Can it keep the strength going into that event?
I think it would be good to relax here and base above 700. We just had a huge move. If you remember, it was like 670 the day they showed the world the iPhone 5. So at this particular point, I think it's nice that it's above 700. I think you trim and trail it. As a macro investor, you stay with some. If you remember, first time Google tried to get through 700, it didn't have much power. Then it held that 21-day, and then all of a sudden today it's over 720. So you might get a good sale if you take profits today, but if you don't get back in as a macro investor, you're probably going to be upset if this thing goes north of 750 this year.
Exactly. All right, well, that's all we've got in the Morning Call Express. Stay tuned for the long-form version for all of this and more.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.